The silver market is in freefall. No, it's not a minor pullback or a quick correction. It's a full-fledged crash. Right now, as you watch this, silver has plummeted through $72 an ounce, with every minute bringing even worse news. Gold? It just broke below $4,600, continuing its downward spiral. The numbers keep dropping, 4,550, 4,520, and they're not stopping. This is not just a market dip. This is a crash, and it's happening right now. You might think that Friday was the worst of it, with silver dropping 38% and gold falling 16% in a single day, the worst we've seen in 45 years. Everyone thought that was it. People thought the selling pressure was over. They were wrong. This is just the beginning, and the crash is accelerating by the minute. Section 1. What triggered the crash? So, what's really behind this? This isn't just a normal market fluctuation. This is systemic liquidation, a massive sell-off that's being forced by the system itself. Let me break it down for you. When you trade commodities like silver or gold on futures markets, you're typically required to put down a margin, a deposit, around 10% of the position size. For example, if you want to control $100,000 worth of silver, you'd need to put up $10,000 as collateral. But here's where it gets tricky. If the exchange raises the margin requirements, like they just did, suddenly you need more cash on hand. Not tomorrow, not next week, but immediately. If you don't have it, your position gets liquidated. And when millions of traders suddenly get hit with margin hikes, they are forced to sell their positions at whatever price is available. The result? The worst possible exit, driving prices down even further. But here's where it gets insane. This isn't a one-off. Over the past 8 weeks, the exchange raised margins 8 times. That's right, 8 hikes in 8 weeks, each one tightening the screws. When this happens, it forces more selling, more forced selling, and it pushes prices lower, which triggers even more margin calls, creating a vicious cycle. Section 2. Why this is different. The unprecedented coordination between markets. Here's where it gets even crazier. As the Chicago Mercantile Exchange, CME, was raising margins, guess what happened halfway across the world? The Shanghai Gold Exchange did the same thing on the same day. That's right. China and the US, who don't agree on anything, were suddenly in perfect harmony when it came to raising silver margins. Why would two economic giants like these, who are constantly at odds, coincide on this move unless they were both fearing the same thing? That fear is what we're seeing in the markets right now. The paper to physical silver ratio is out of control. For every ounce of actual silver in the vault, there are 356 ounces of paper silver. What happens when everyone realizes the system can't deliver the physical metal? Well, we're starting to see it. Section 3. The flight to physical. What's really happening with silver? Take a look at this. In January, a staggering 33 million ounces of silver walked out of the COMEX vaults in a single week. And that is not just a small number. That is 26% of everything COMEX had in storage. In just 1 week, nearly a third of their silver disappeared. But it's not retail investors who are pulling out all this silver. This is institutional money. Big players, like manufacturers, sovereign wealth funds, and the smart money, are draining the vaults. Why? Because they know something. They know the paper price is artificially low, and they're taking delivery before anyone else catches on. Why does this matter? Because March is the key date. March futures represent 528 million ounces of promised silver delivery, but the vaults only have 113 million ounces. That's a huge gap. Almost 5 times more silver has been promised than is physically available. If just 22% of people holding these March contracts demand physical delivery, the vaults will be empty. And when that happens, chaos will follow. So why are we seeing these margin hikes and forced selling? The exchanges want to clear out the long positions before this reality hits, and they're succeeding. But there's something else going on. The physical silver market is not crashing like the paper market is. In Shanghai, the physical price of silver is still hovering around $100, while paper silver in New York is languishing around $72. Section 4, the $28 gap. What does this mean for you? Here's the crucial piece of information you need to understand. Paper silver and physical silver are trading at completely different prices right now. In Shanghai, where actual silver is changing hands, the price is $100 an ounce. In New York, the paper price is $72. That's a $28 difference. 39% higher for physical silver. Think about that. Why would anyone in their right mind pay $100 for silver in Shanghai when they could get it for $72 on paper? Because they know the truth. The paper price is manipulated. The real value of silver is closer to what the physical market is paying, not what the paper market is showing. Section 5. The real silver shortage. What this means for the market. This price manipulation isn't happening in a vacuum. Silver has been in a supply deficit for 5 consecutive years. The demand for silver is exploding, especially from industries like solar, electric vehicles, EVs, AI chips and consumer electronics. But the supply, it's flat. The cumulative shortfall since 2019 is 1.3 billion ounces, 18 months of global production consumed. Meanwhile, China, which refines 65% of the world's silver, has just made moves to restrict exports. As of January 1st, 2026, silver has been added to China's strategic materials list, and now export licenses are required. This could bring global silver production to its knees. Section 6. What's really happening behind the scenes? You might be wondering why this crash is affecting the market so dramatically. But when you look at the fundamentals, this crash makes no sense. The supply deficit is real. Demand is rising. China is restricting exports. And the price is crashing. The only thing that makes sense here is that the paper market is being manipulated to drive prices lower before the physical metal becomes too scarce. Here's where things get dicey. This crash is wiping out small traders. But what's really happening is that wealth is being transferred. As the price falls, institutions and big players are scooping up the metal, taking it off the market, and preparing for the future. Section 7. The future of silver. Will paper or physical win? So where does this all lead? What happens next? Nobody can tell you the exact bottom. No one can predict the future with certainty. But what we do know is that the fundamentals haven't changed. The silver shortage is still real, the demand is still there, China is still restricting exports, and the gap between paper and physical silver is still massive. As long as these factors remain in play, the physical market will eventually win. It always does. History shows us that paper promises can be created endlessly, but physical metal cannot be printed. When the manipulation breaks, when the paper market meets reality, someone will profit. The question is, will that someone be you? Will you survive until the market corrects? Or will you be like the many traders who've been wiped out in this crash? Closing thoughts. What should you do now? The winners in markets like this aren't the ones who can predict the future perfectly. They're the ones who survive, the ones who manage their risk and stay calm while others panic. So ask yourself, do you understand your exposure? Do you have a plan in place? Are you ready for what's coming next? If you can survive this volatility, if you can hold through the pain when the market eventually reverses, it could be you who profits from the closing gap. Keep an eye on these critical indicators, the Shanghai premium, lease rates, and COMEX vault levels. They will tell you what's really happening behind the scenes. Closing hook. So, what's next? Will the paper market crash completely, or will physical silver prevail? This is a battle that's been brewing for years, and now it's reaching its breaking point. What side will you be on when the dust settles? Let me know your thoughts in the comments below. If you found this analysis valuable, don't forget to hit that like button and share this video with someone who needs to understand what is really happening in the silver market. Subscribe to stay updated. I'll be covering this every day until it breaks.